I guess 57, nothing to really be worried about. I think it just came in with two things in mind. You have to understand that what happened the past few days has been very significant for the Philippine financial markets. First, we saw interest rate yields moving higher by 33 basis points. I'm talking about the 10-year BVAL. The second, the stock market falling below 6.5, and then eventually the peso breaching 57. So the BSP governor highlighted geopolitical concerns, particularly for the Philippines and China. I think the other thing is that with the Israel and Iran and Hamas, the geopolitical tensions globally, I think, has risen twice compared to last month. So this has eventually created an additional worry for investors. So the dollar got stronger. The other one was basically more driven by the US Fed, very similar to the statements that any cuts would have probably been pushed later back this year. So that actually created a period for a strong dollar.
Well,
So this is, I think, the main reason why we're at 57.
okay, but in terms of like small movements in the exchange rate between the PHP and the USD, though, according to the BSP governor, he's been closely watching, and the BSP has been closely watching these movements. And every time there is some sort of incident over at the West Philippine Sea, he notices movements that, of course, does not favor the peso soon after or on the next trading day. What would you have to say to that? Did you notice these same little movements?
Okay, let me put it this way. I would not look at those events, but I'd look at the end of 2023, the peso was trading ended the year at 55.37. In the first quarter, we've seen that compared to previously, the peso would normally move between 15 to 30 centavos a day. But in the first quarter of the year, the peso was averaging between around 50 to almost 1 peso in terms of trading range. So this is eventually accounting for a lot of sort of a shock absorber to all of these situations. So what I'm just saying is that there's a wider range for the peso to move, but we've seen a very good performance, a gradual movement in terms of that the market isn't worried about. So in the first quarter, we saw from 55.37 all the way to 56.50. The market wasn't worried about any volatility. It's only now that we breached 57, particularly driven by a couple of factors. And one of them, of course, is the more heightened China-Philippine relations. And of course, I think what really adds to the worry is that the Fed is signaling higher rates for longer. And when a country continues to keep the rates on a high side, the demand for their assets becomes higher. So people are flocking to the dollar for investments. No? So this is also another reason why the dollar is a bit stronger, even in against other currencies.
And since you brought up heightened geopolitical risks, I have to ask you, when you look at the landscape right now, we're talking not just the flashpoint in the South China Sea, but also growing tensions in the Middle East, which actually have escalated in the past several days. Also, there's Ukraine. We're more than 2 years into the war. Do any of these worry you? Will any of that
Yes.
hit the currency?
Well, I guess this actually adds to the idea. I think my base case, I think the last time I was interviewed at the big story was basically looking at a year end of 55.50. Eventually, with this geopolitical tensions, it seems that we might be expecting probably closer to 57.50 or 58 by year end, pricing these geopolitical tensions. Right now, we're probably, as I said earlier, the geopolitical uncertainty has jumped 2 times compared to the previous month. Now, as we move to the fourth quarter you have to price in Trump 2.0. So that will lead to more trade wars, and that means the dollar will eventually take center stage. And as China has been doing with the trade wars, they've allowed their currency to depreciate. So competitive devaluation could be another new set of words to be used towards end of the year.
Wait, you're already pricing
I
in
know
Trump
he already.
2.0?
I said
We're still more than 6 months out, Jonas.
I'm not over the prediction, your year-end forecast also for the peso, but you don't seem worried. So at
That's
the
why
point,
he's pricing it in.
I know.
That's why he's pricing it
Okay.
in already.
If you look at a weaker peso, and if you recall, in 2022, one of the bigger drivers with a slightly weaker peso is that it boosts tourism. Hopefully by then, the weaker peso will probably happen in the second half, much greater, so that hopefully a lot of people, especially in the summertime of Americans, they'd probably come to the Philippines because the peso is slightly weaker. So
well-
that's actually good for tourism. Now, it might be bad a little bit for inflation, but hopefully we don't get to see oil going beyond 100. Because right now it seems that the uncertainty is rising. You have to understand that at the start of the year, people were very optimistic that rate cuts would materialize. So what happened is that people were so gung-ho in buying the stock market. People were expecting that government will continue its infra program. But suddenly, all of a sudden, we're starting to have these inflation fears. So my worry is that if the extreme heat will continue, and just like the previous topic that you had on electricity, they all boil down to higher prices and means higher inflation. So if inflation surpasses 5% in the coming months, then that could be another worry. And this is not only in the Philippines, but the rest of the world. So the risk there could be more shifting to a tightening bias. So that's something to be worried about.